Good morning, everybody. This is Jack Gleason with Startuptrading.com. I'm just going to quickly go over the news events that we have. Today, we had unemployment claims, which came in slightly better than expected by about 8,000. They still 1.5 million jobs lost, which was better than expected. The GDP for the Great Britain pound is going to be at 2 a.m., so as well as manufacturing production. So we're going to have some economic numbers out of Great Britain. And then tomorrow morning, preliminary University of Michigan consumer sentiment at 10 a.m. And that's really it for news. We have a lot to go over this morning. I'm going to try to cover every one of these markets in depth. We have a lot just to go over. So I'm going to start off with gold and silver. These markets, I believe, are beginning their next leg up. Now, gold has been inside of a consolidation since April, and we came out of what is like a fourth test of that 50% retracement long on the 5th of June. Since that, we've had a daily leg start higher, which is pretty significant. We haven't had really a daily leg start higher that looks like this, and what that is that's a signal of strength. I want to pay attention to how big this profit target is. It is still roughly 100 points above us. That's a $10,000 move per contract on a full contract, or a micro. If you're trading micros and you can swing micros, that is a $1,000 move per contract on a micro contract. So for those of you guys who trade micros, there's not a lot of opportunities to swing contracts for $1,000. I do believe this is potentially one of them. Now, Monday, we began a full 50% retracement for the week. We blew out of those targets, and we're looking for the extension, the 50% retracement off this extension on Tuesday and Wednesday. Now, we traded the 38. We did not hit targets in the morning, and then we retested the 50 on Wednesday on FOMC, completed our profit targets, which took us back to the previous highs of Tuesday of the prior week, and then we sold off into what is a same anchor new high sequence this morning. Now, the 38% retracement was a 1731 half. The full 50 was basically front run by 2 points. This extension has an upside target of 1761, and this market is moving. Like all of our markets, we are in very active, high participation markets right now. We are double leg start up green on the hourly, and your upside target is 1761. As far as a micro series, I don't want to really focus on the micro series in here, but if you don't have an entry, right now, the only thing I look at is the full 50% retracement long from lows. Moving on to silver, which just came into in this market. We had a leg start hourly and a swing mark, as well as a profit target that we ran into on the highs on silver. The good thing is these pullbacks, after coming out of this, gives us another opportunity to get long. This morning we did have a pretty aggressive front run on that hourly halfway back, but this targets all the way up to 1864. And let's pay attention to where we are in the daily chart. These precious metals, yesterday, if you're not aware of what Powell said on the mic, basically they're going to keep interest rates to zero until perpetuity, which is 2022. And who even knows if they'll raise them then. So, the Fed's full on out of money printing, and that's a fundamental case for the metals, but that really hasn't changed. What changes is the price action. There was an incredible bid out of the FOMC event yesterday. We completed profit targets and just pulled into our next 50% retracement. And there's going to be a micro series out of this low, but these are markets that, if you can swing them, trade the smaller contract or whatever you can, because these profit targets, when the market starts moving like it's currently moving, these are big targets, and they complete quickly, as opposed to consolidation phase like we had Monday, Tuesday, Wednesday before the event. We're going nowhere. The FOMC event comes out, the news is on the table, the market makers, the traders, the hedge fund managers, they're putting their money to work, and that's when you start to get these big moves. Moving on to the VIX. Now, yesterday I was looking at this. There was a couple of different setups, but basically we had this full halfway back long, and we took out the low, and then we just ended up going straight up. So we broke the long setup, and then we went straight up It was just a nice little fake out to, I guess trap one more time, and then we went totally through our profit targets in the overnight session, completely through profit targets in the overnight session. Once we went through that negative 23% profit target, we began an extension from the 28.35 to high. 28.35 is the highs traded, and those have completely blown through profit targets. Now, we do have the possibility of going extension to extension, but the first extension is always in play. The first extension is always in play. So that is going to be the difference of where the ES goes from its current position. I do want to point out we are right at a daily extension. So it's very critical where the ES goes, where it currently is. We're looking at an 80-point gap down in the index. An 80-point gap down is pretty significant. And let's not forget, basically everybody and their mothers who's ever bought this market since the bottoms going back to March thinks they're a genius. So there's a lot of people who still, and they've made a lot of money. They're going to be coming in. They're going to be buying the markets. We can't just expect after 80 points we're going to continue going straight down here. So what I'm watching is there is this daily extension, and I do think it's there. We're going to dip. You can even call it a weekly extension. It's from, I'm going to go to a daily chart. The swing high, all right? This is the swing high of April 30th to high. This was on our chart the other day. We've been looking for this extension to come into play for some time. 30.98 is that support. We've traded it to the tick. If we do open, a lot of times when you have a market with this big of a gap down, stops are just automatically hitting the open. So you'll, get an initial move down lower, and then we'll pop, because you just have literally stops getting triggered as soon as the market opens, which just pushes it a little bit lower below that 30.98. So what I'm looking for here this morning in the S&P 500, and what I think is a pretty high possibility of a decent reversal setup, and I know Perry had talked about in his trade plan video, we're below S4, which 7 trading days of the year do we close and continue below S4. Maybe today is one of those days. We don't know. But if we continue right now, we are holding this very tiny micro extension. And it's not even something I would trade, but it's 31.20s to lows. This is just super, super tight. And it targets into new lows. If we get those new lows, we're going to be running into this 30.90 and 30.87. Well, if I go to a 4-hour chart, this comes from my swing mark leg start indicator. So we have a swing mark from Thursday of last week on the 4th of June, and then we have a 4-hour leg start. So both of those levels are marked there, and that's why I'm using them as a potential support zone. Now, the other possibilities we have here today is obviously we get a bid off the open, but there's plenty of resistance levels above. The first one that's going to come into play that I'm paying attention to is just this same anchor new low from 31.62 to low. We traded this once to target. We traded it twice actually here to target. There's 3 times to target. This would be the 4th time this extension has been used. And we have this is the zone. There's a 31.22s. I would use the 50 here. It's a 31.30 just because it's right off the open. If we trade up instantly off the open, I would look at that 38.2 at 31.22s. But if we spend some time and get below, I'd probably back out and look at the 50. So we are going to be bearish below this 31.37. If we break above 31.37, there's a possibility that we begin confirming this support level down here in the ES. So those are the 2 scenarios that I have playing out in the ES in detail. Moving on to the Dow, I just want to back out to the daily here and look at some of the previous extensions we had. There is an extension from what is April 17th to high. Okay, and just like the S&P, we're almost right on it. We actually have not yet traded it. So I do want to go over that. I'm going to go to a 4-hour chart. I didn't do much analysis on the Dow this morning. We have that level is going to be at 25,976. But let's mark up some other levels of just like technical support. So you have this previous high on the 4-hour chart. All right, and that's at 25,794. I'm going to mark that up. Also a leg start down right here. I'm going to mark that up. I don't know if we get this low, but to me, this would be the kind of, if we get down below 25,800, that's where I think people really get in trouble. shorting anything below those levels here today. But we are already almost down 1,000 points in the Dow. It has been a long time since we had this big of a sell-off coming out of an FOMC event. So if you look at the Dow, the difference between the Dow and the ES and really the Dow and the other markets is this: if there's any market to pay attention to for a higher time frame short sequence, I believe it is the Dow here. This is something I think is really, you should have your eyes glued to this setup. So we had this 50% retracement short that traded on Wednesday, right, into the FOMC. The Dow held it. The ES didn't hold a halfway back short. The Nasdaq didn't hold a halfway back short. I didn't check the Russell, but out of the three markets that I'm watching, we completed and totally went through those profit targets. So the cleanest short setup, and it might not trade today, maybe it trades tomorrow, I'm not sure, but that extension from that low, from 26,928 to low, whatever the lows ends up being, I mean, right now we're basically on a low, so this is going to most likely change, but that extension in the Dow on the hourly time frame is going to be a really big tail as far as where we can go. You can see right now, assuming we don't make a new low, I mean, even if we will, we'll line up right where that leg start on the hourly chart began its move down. So that'll probably go into the laser setup section of the startup trading trade room here today. I'll post it once we finalize a low. But yeah, that's a really important setup I'm looking at in the Dow. So Nasdaq, once again, I talked about this yesterday. I actually tried getting short. The Nasdaq is just a market, like, regardless, it's just not the best market to short. Simply put, obviously we're down. If you want to look long a market, you want to look long the Nasdaq. That's just, I consistently convince myself this. It's like you have to put your head through therapy to understand how strong the Nasdaq is. So I'm totally staying away from shorts. Even they're in play, but I would rather pay attention to what I consider to be the long sequence, which is an extension from the high of May 26th to high. We traded those two targets yesterday, and our high is basically those profit targets on the negative 100. So that same anchor new high, let's just take a look here at what we got as our support level. If we're going to bounce into that 10:30, 10 o'clock time frame, if we come down here, I just want to pay attention to like this previous high we broke out of on the hourly chart. That extension is a 98.80. We're going to be below S4 at that point. We'll be down probably a little over 2% in the Nasdaq. A lot of people have been paid pretty heavily, and if that does not hold, I would not have really any support until we came into the full 50% retracement from the swing low of the 27th, and that would bring us back to 96.64, and that wouldn't just be a straight down move. That would definitely take some time to play out, but for those of you guys who are interested in the Nasdaq sequence, I will go over it. So post FOMC, what was the difference between the Nasdaq? The Nasdaq made a new high, it made a new all-time high, and in fact it made another one, and then we began selling off in a close. Then we had a 50% retracement short, which traded an extension. Okay, well, that extension went once, and it was sloppy. Look, we break to 61 twice, okay? And then the third time also pierced to 61. So you see how the Nasdaq just, even though these setups are completing, they're really not that technical. Break of the 61 on the extension, and then we complete. Same anchor new low, front run on the 50, then we complete. Same anchor new low, pierces to 61, and the low is the completion. But that is the current sequence there in the NQ. And that sequence, that target would lead us to 98.63. If we somehow get down to, if we continue selling off into the end of the day and we are below this 98.15, everything's on the table. If we're below this 98.15, which is a 61 point break of the extension past the 1 o'clock time frame, I wish I could make this like double green, but this zone, I'm just going to put a little white box in here. If we are below that, this is the potential for that. We've seen it quite often where you get those end of the day rallies where we just totally rip higher in the close. We could move, if we're trading these levels into the close, we could move 80 points off this in the last hour. So, that's why I'm just really highlighting that level, because this is one of those days where the volatility is increasing. We're coming out of all-time highs. The FOMC event is in. So there's a lot that can happen. All right, moving on to oil. I dropped this in the laser setups this morning, and we have already traded it. But the extension from 37.87 to low traded 37.07s, and then we have made a new low. The second test I'd be a little wary of, but let's watch the sequence out of this. So we had a 50% retracement, and this is where it got a little tricky. After this 50% retracement, you could argue you had that next halfway back right there, but that was aggressively front run. So if we do break this extension here, if we hold it, it's just going to be a same anchor new low from 37.87. 37.87 to lows until it breaks. And if we break that 61, I'll probably update it in the trade room, but I'm going to be looking short between like the 37.80 area to the 38.20. I don't know exactly what I'd like to see, but conservatively speaking, the full halfway back from yesterday's high to low would be the best. Now, oil is not the indexes. We do have a major trend break here today. We've been in an uptrend since the capitulation in oil. We basically traded negative, and it's been an incredible run higher, but this is really the first higher time frame trend break. And our support levels below are going to be coming from the extension that exists from the high of May 7th to high. So May 7th high to high. And I don't have any technical support that I watch until like 35.21. Let me check what the halfway back is from that Friday. Yep, that would be 35. Yeah, there's also, not that, just to be aware of it, the 50% retracement long from May 22nd to high. Let's see here. That'd be a 35.58. I'm just gonna mark that up. There's also just a visual reference of support there, because you have this high, swing low, etc. But I think oil can make it over the next coming days, make its way down to the 33.59. The 33.59. Moving on to the USD JPY. Keep it simple. We're in an extension from a 107.78 to low. There is some support down here, but we are bearish below the 107.44s. We are bearish below the 107.44s, and there is a higher time frame downside profit target in the USD JPY at the 105.77s. At the 105.77s, that is the higher time frame profit target. I'm going to set an alert there, and I went over that yesterday on the daily chart, so I'm not going to cover it here. Moving on now to the Aussie dollar, we have this extension. We traded our 38 on Tuesday. We made a new high. We're coming back down. I'm not going to draw up the short series just quite yet, outside of the full 50% retracement short, which would be a freaking gift if we could get it. And I would imagine it actually gets front run. If we can get the 69.76 short, and I would even say front run by 4. So once we trade up into 69.72s, assuming we don't make a new low, I have no support until 68.60, and that would just be a test of the 50% retracement of the extension. It's also a 4-hour leg start, a previous swing low, so there's a lot of support that I have in this area. And really, if we don't hold this support, these really aggressive trends are just going to completely reverse. The euro still is really strong here. And it's kind of surprising because the pound is broken down and the Aussie dollar is broken down, but the euro is staying strong. The halfway back from the low of the week to high has held its halfway back long. So we are bullish above the 131.10s with an upside target of a 114.65 and a 114.71. Now, if we get up to those levels, I do think there's a possibility of a reversal play, because we're going to be running in that dotted orange line as a daily swing mark. So anything above 114.71s, I think people are chasing up there, but we'll tackle that when the time comes. Right now, if we break below 113.10s, there'll be a 50% retracement short, but we are just in 2 long setups with upside profit targets, and there really isn't much to do. Moving on to the pound. The pound here ran into some resistance the other day. I had that one, it was a 128.05 resistance level, and we just totally fell out of bed. Now, when we came out of that resistance level, we traded our first 50% retracement short, it was sloppy. Okay, it was sloppy. We just pierced the 61, but then we completed targets, and then that swing high has been used once to target. It's been used twice right now, and we haven't completed targets. But what's important to note is our profit target of this is going to be a 126.19. 126.19 lines up with a support level I have from 124.25 an extension. So that 126.19 could come into play as support here. Anything below 126.19, I think the pound really starts to lose its support. And then for the USD CAD, I do want to show you guys this daily sequence, which is super important. But basically, we had these massive 50% retracement shorts in the USD CAD from the highs of 2020 to low, okay? And that's what we came out of. We've totally completed those negative 61s. Totally completed those negative 61s. We ran into support and we caught a bid. Now we have an extension on the daily from those previous lows. It's a 138.49 to low, okay? And I had drawn it to that previous low, but your resistance levels here, I have a 135.19, and then I really like this level up here. It's the 135.46. So we did have a counter trend trade long, and yesterday we had a trend break at lows, and there was an opportunity after the trend break. There was a trend break, a halfway back short for the day. We broke it, and this was a great setup. It was a trend break off of support. You had your first 50% retracement long, and then we broke, and now we're in an extension. So that's what I have right now, the 134.06 to high, and this 135.51 is really the most important resistance level I'm looking at. Moving on, oh yeah, I already covered gold and silver, and they're just ripping back up here. So big targets in these gold and silver plays. If you do get an opportunity to get long, be a little wide with it. We can definitely complete those targets here pretty quickly. Just remember, gold is a target that's 100 points higher. If you can get long a micro contract on a personal account and swing it, do it. Those are the trades you should be looking for on your personal micro account that you can swing, because those are the trades, that kind of hands off, don't have to do much, and really can, there's kind of like an investment in your trade. So we are coming off the ES support here at 30.98. We are coming off these support levels in these indexes, so we'll probably trade those extensions first. That's going to wrap up this video. If you enjoyed it, give it a thumbs up. I know it was a long one. I'll share my levels in the Startup Trading Trade Room, go live, guide you guys throughout the day. It's going to be a busy one, so be active, be patient, trade by your rules, and don't over leverage. Take care. Be active, be patient, trade by your rules, and don't over leverage. Take care.